time. One of the big takeaways from this deal is how it is going to reduce the compliance vis-a-vis trade cooperation between both the countries, because we need to understand that if compliance are reduced, then we'll have direct market access to substantial technologies. How do you perceive this particular deal in easing those compliance measures?
Well, first of all, let me say that this is not only a trade deal, this is also underlining a trust deal between the US and India. And when you start looking at it from that perspective, naturally compliances also need to automatically become more facile, less frictional, more intuitive. And so I think the fact that we have an agreement, it may come at a long list of a la carte options. There is a trade basket, there is a commitment to buy, there is a reciprocal access to respective markets. Once the terms of trade are clear, naturally compliances will become less onerous and more facilitating. I am a student of international business. I did my master's at the Indian Institute of Foreign Trade, and that was an era in which we had just begun economic liberalization. And so what used to be the course earlier was only about compliances, dozens and dozens of forms and layers of paperwork amounting to a very puny share of global trade. Moved to today, when naturally opening up means there is a trust quotient which is unbreakable, then you don't need that much of regulatory fencing, that much of oversight, because it just becomes the usual ways of doing business with each other. So on the whole, once the deal is firmly in action, I don't see the need for very layered and very excruciating compliances. In fact, this is the big takeaway, that we are moving to alignment, we are moving to access, and most importantly, trust is flowing before capital.
Absolutely, Mr. Singh. And also, if you talk about, because this particular statement has tariffs elaborated on various sectors, if you talk about auto, defense, agriculture, fishery, but I want to focus on defense for a bit. US has also removed the national security tariffs on auto parts. And of course, Prime Minister Modi's vision is how to take the auto industry even in a more advanced stage when we're talking about electric vehicles, hybrid models, and all of those technologies. So how do you see these national security tariffs, which is definitely something preferential that has been done by the United States towards India?
Well, that's a very correct observation. As a matter of fact, I would zoom out a second and say, look, traditionally India has had a low share of manufacturing exports relative to the rest of the world, and China had stolen a march over us in the preceding 3 or 4 decades. And so basically what has happened is, because India is not a manufacturing superpower, because India's share of the export basket of manufactured goods has been traditionally low, therefore we have historically grappled with a balance of payments crisis from time to time. Now, there will be a huge leap forward in terms of manufacturing access to market and the flow of capital, which will lead to a spurt in manufacturing. And that covers a whole spectrum of industries, not the least of which is manufacturing and electronics, whether it's smartphones or semiconductors or component manufacturing. Automotive components, a huge market in North America. American brands in automotive have been here in the past, whether it's a General Motors or a Ford, not then to very successful results. And I think domestic players are very well entrenched. Moving to defense and aerospace, I think that's a critical area of national priority. We live in difficult times. We live in a difficult neighborhood. So a tighter embrace with America, which allows us to import critical technologies, will be to our benefit. And we have a number of MRO and localization agreements which are with the big defense suppliers in America, whether it's Lockheed Martin or in the civil aviation space with Boeing. All of these will basically get cemented because these are long gestation cycles. So capital comes, capital gets rooted, millions of jobs will get created in the process, and that capital will be here to stay, because when you are in for a long cycle, you have to extract a return over a longer cycle still. Besides this, I would say energy is another area, whether it's LNG or it's nuclear energy, in which there was a lot of discussion during the budget as well. And last but not the least, digital services. So the way I'm looking at it, Ina, is that there is a spectrum of critical trust-based alignment. We are at that top table, and across these critical industries, these are not industries in which America gives access or reciprocity to any country in the world. It is very judiciously chosen India to do this, and we should celebrate that.
Absolutely. United States judicially choosing India. And Mr. Singh, it's not just United States opening its market to India, but also India opening its market for United States. We have seen that in that particular statement, we are going to import US tree nuts, soybean oil, a lot of agricultural products as well.
Yes, well, let me again put it in perspective. So India's export basket right now is about roughly $250 billion in both parts, that is merchandise and services. And as you know, our current account deficit is wafer thin, which means roughly we are importing that much worth. Now, over a 5-year period, there is a stipulation that we should do $500 billion of imports. And those imports are in critical sectors, those imports are in consumer goods, those imports are in nominated, defined agricultural categories as well. I don't see any risk at all. In fact, I see us to be beneficiaries because America anyways needs to have a much larger share of our overall trade basket. Now, in 1991, India opened up with economic liberalization. Really, this is the watershed mark when we truly are globalizing, and no better partner in the world than the United States of America. But having said that, my compliments to the Honorable Prime Minister and the team, because there has been, in the last 12 months, a succession of movements, whether it is reforming of labor laws, bankruptcy, energy, ease of doing business, and then a slew of trade pacts, whether the UK-India trade pact, the India-EU deal, or for that matter with New Zealand, Oman, and so many other countries, that today, relative to the rest of the world, our tariff structure is much better, even in our own neighborhood, a Bangladesh, a Pakistan, a Vietnam, any Southeast Asian country. We are way better off than them, and we are significantly better off than where China is vis-a-vis America right now. So I see this to be an overall spring effect. It will lift our economy both in the short term as capital starts coming in, but also in the longer run because it cements the geopolitics. This is basically a geopolitics deal which is coming to us as a trade deal, but it cements our status, whether it's in the Quad or several other agreements that we have with the United States of America. I think it makes us more prosperous, more secure.
Absolutely, Mr. Singh. And Prime Minister Narendra Modi also spoke about how this particular interim trade deal is going to boost and propel the jobs and employment opportunities in India as well. How do you look at this? What is your outlook in terms of employment opportunities which are going to gain momentum after this deal?
See, again, as a rule of thumb, if we have, say, about $250 billion of, services exports, of which roughly $200 billion is in the IT and IT-enabled services end of it, almost all of it led to job creation. Where did the Bangalore miracle come from? Where did the Indian IT industry explode? How come it exploded with such growth? It's because we had access to America as a critical IT services market. Now imagine the same reality in manufacturing. And since we have largely ring-fenced agriculture, that accounts for about 16% of GDP, and we have about roughly 50% of our population directly or indirectly dependent on agriculture. As manufacturing takes off, you then provide access to those folks who are less than productively deployed in agriculture to move to manufacturing, get better jobs, get more stable incomes. It leads to a boom in consumption, and the virtuous effect takes over. So I think this is good news on all fronts as I see it right now. But also that it is an interim deal. So, we have space for maneuvering. We have phased targets. We have quantitative relaxations over a gated period of time. So it's not as if it has been written in stone and nothing can be done from tomorrow. But as things stand, and to the extent that details are available in the public domain, it seems to be very, very gratifying for India.
Absolutely, Mr. Singh. And the statement also points to the fact that the negotiations between both the countries, India and United States, will continue to take place over the next months and years as well, so that both the countries can come to even more better sort of a structure as far as tariffs are concerned. But I also want to focus on manufacturing that you just mentioned. We need to beat China, or at least come to par with China when the manufacturing is concerned, because if we have manufacturing and domestic manufacturing, it is going to propel our economy.
Yes. Again, manufacturing, you see, the general belief is that manufacturing will not lead to as much job growth because technology has provided for automation. And that is true to a certain extent. The number of working hands that are required for a similar quantum of output, say in the 80s to today, has dramatically changed. Having said that, we are not factoring in the amount of investment that would come in. So there is a multiplier effect on the investment that comes in and also the degree of specialization. Also, when capital comes in, the Indian market story also takes over. You see, don't look at it only with the lens of what we will ship to America. Of course, that is very gratifying. But also, we are the only large economy in the world that is yet growing at 7%, which means roughly every 10 years, the Indian economy is doubling. And every $1 trillion that gets added to the GDP behaves in a very different manner. Our median wage rate is expected to go up. The discretionary income that will now be available to households to spend will go up. The degree of brand value addition will go up in the economy. So on all of these measures, manufacturing will get a natural logical spurt. Also, we need to provide for the infrastructure which this government has done a brilliant job at, whether it's connectivity through roads and highways, whether it is the massive infrastructure investment in ports, it is the upgrading of the grid, electrification across the length and breadth of the country. All of these are enabling features which then allow manufacturing to take root and multiply jobs. So jobs are not only coming because there is an American company that is setting up a plant in India. It's also coming because of the virtuous linkages and the multiplier effects that take over.
Absolutely, Mr. Singh. And the statement also talks about how there will be a cooperation when we talk about innovation. And innovation is something that, again, Prime Minister has time and again spoken about, that we need to be innovative. He has called for a spurt in startups, MSMEs have backed them. What is the mood, general sentiment when we talk about MSMEs and startups and innovators who are trying to do something different?
Address that in two different buckets. As I see it, America is or has been for a long time the global capital of tech innovation for sure, and in particular, the Silicon Valley is the cradle of tech innovation over the last 50 years or longer. And so therefore, the surprising fact is that it's really dependent on, great brains who have gone there from India. And a lot of this will come back to us with capital, or certainly will be motivated to have an interest in the development that happens in India. Even if you see in the venture capital community or in the large investment funds, whether private equity or direct investment, there is a very large American interest already present in India. There is a large branded quotient of American companies operating across all Indian sectors of consumption. So now the question of what does it take to have a startup? Traditionally, an Indian startup would think in terms of the India reality. Now, with these gates opened up, there is no reason why an Indian startup would not think of the world as a market. And that was the defining difference between India and America. An American startup would, from day one, imagine the world to be its market, whereas in India, we were more myopic and short-term in our thinking. Now, with the great traction and momentum that has happened, numerous unicorns have been able to go IPO route and raise capital from the markets. The domestic investor has stood by. The Indian stock market investments have continued unabated, even though there was, unfortunately, an FII and a foreign direct investment withdrawal over the last 12 months. I think all of that is also set to reverse. So if you see, First of all, we will get much higher investment from abroad. Secondly, the India innovation story is actually located as one spirit, two geographies. There's a very large Indian contingent innovating actively and creating value in the Silicon Valley. That is going to be much more motivated to come and look at India opportunity. Thirdly, Indian entrepreneurs, and most importantly, the Indian entrepreneurs who were thus far limited to boundary conditions of operating within India can now look to the US and the EU and in fact the whole world as a market. So I see this positive effect taking hold in the very short term and then growing from strength to strength.
Absolutely.